This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachardis. Thanks for joining us at xm.com. Market participants are becoming more confident the Fed might raise rates one final time this summer, and that rate cuts won't come into play anytime soon. Some remarks by Fed Board Governor Waller and the minutes of the latest FOMC meeting reinforced this notion yesterday, with both stressing the lack of meaningful progress on inflation. There's a growing rift among Fed officials on whether further tightening is required. Since there is so much emphasis on economic releases and the latest round of business surveys was solid, markets now assign a 30% probability for the Fed to hike in June, which increases to 65% for July. The reassessment of the Fed's rate trajectory has breathed life back into the US dollar. While rising Fed bets are a blessing for the dollar, they are a curse for the yen, which continues to be tormented by the Bank of Japan's reluctance to shift into tightening gear. After nearly reaching a record high earlier this month, gold has been struggling to attract buyers, trampled under the hooves of rising real yields and a fired-up US dollar. The downward correction might persist for now as these detrimental forces remain in effect. In the big picture, though, the latest trend of sovereign gold purchases by nations with cold relations with the West is a game changer for bullion dynamics, as it almost establishes a floor under prices. It was another stormy session on Wall Street, with the major stock market indices losing some ground as the Fed was repriced, and the negative link between yields and equities reestablished itself. The weakness did not last, though. Nvidia reported earnings after the bell that far surpassed analyst estimates, while it also boosted its revenue forecasts for the next quarter, sending its stock price into overdrive. Nvidia shares soared 25% in after-hours trading to reach new record highs, which single-handedly managed to erase all of the Nasdaq's losses for this week. In other words, Nvidia saved the stock market this time, although the fact that just a handful of companies are now carrying the indices on their shoulders is worrisome. Speaking of the debt ceiling impasse, credit agencies have started to tighten the screws on lawmakers, with Fitch placing the U.S. on rating watch, a warning that a downgrade is coming if no deal is reached in time. This was today's Daily Market Comment. Thanks for joining us at xm.com.